The US economy probably is heading for very, very high inflation, perhaps hyperinflation, because it's entering a crisis that is unprecedented. I've been saying this was going to happen since 2018 when I was writing my first book, Socialism or Extinction. I've been arguing for all of those years that automation is making capitalism obsolete, and I've been saying that tariffs would get higher and higher, which has happened with every president since 2008. The average rate has been going up. Obviously, Trump is hiking them at a very steep, accelerating rate. But again, this is a reflection of the ever greater demands of capital accumulation. The steeper capital accumulation gets, the steeper the next sort of stage of capital accumulation gets. So it gets harder and harder, more difficult to produce enough value to reproduce capital, because with every expansion of capital, you get a devaluation of capital. In short, see my other videos for a more detailed analysis or read my books. But yeah, the problem that the US has this time that it didn't have in 2008 is that the bond market is collapsing. So the stock market is dropping. Obviously, we haven't seen a 30% fall yet, but a 30% fall would signal a recession. That's the average amount the stock market falls when we've had recessions in the past. But usually in a crisis, when the stock market is plummeting, investors will flee to the bond markets, because that's relatively safe, because the government, you're borrowing from the government, which can print money and is the issuer of the currency. But as I say, most of the investors that are fleeing stocks are also fleeing bonds, or both is happening at the same time. People are fleeing stocks and they're fleeing bonds, and they're going into hard assets like gold. The gold price is shooting up at a record pace. This means that the Fed can't lower rates, really. I mean, it can do it, but if it does it, it's going to massively devalue the currency, the US dollar, and that will fuel inflation massively. This is why there's a bond sell-off, because they know the bondholders aren't confident. They've lost confidence in the US government, not just because of the chaotic nature of Trump's tariffs and the lack of the loss of confidence in the US economy as a result, but when the Fed started trying to lower rates last year, inflation started to go up, and that meant that the amount of debt was rising quicker and the amount of debt servicing was rising quicker. So the amount, the rate that is being paid on the US 10-year bond, with that of 5 years, and the government holding debts that is over $36 trillion, approaching $37 trillion now. And yeah, so the more debt you have, the more risky it gets, and the higher the bondholder demands in terms of interest, because it gets riskier and because they're losing confidence that they're actually going to see a return. So yeah, the Fed's in a position where it doesn't want to cut rates, because that will fuel inflation and tank the currency. And obviously that will be disastrous for the US economy and its position as the world imperialist power. I mean, what I've been saying this whole time is that that US capitalism is between a rock and a hard place. The Fed is between a rock and a hard place. When they get high inflation, they will want to raise rates, because they want to get inflation down, because high inflation is it means that the cost of borrowing is high, which means that investment drops, it means the cost of mergers and acquisitions, yeah, is expensive as well. So it deters that, which is one way of accumulating capital. If you can't just do it through expanding your own production, you want to merge with another company, and so on and so forth. And this heads in relentlessly towards a final merger. So we've seen the number of banks halve in the US in the last 20 years. We've seen the number of publicly listed, privately owned companies in the US halve in roughly that time. Since the 1960s, the average age of an S&P 500, or the average lifespan of a S&P 500 company, has fallen from 60 years in the 1960s to around 15 years in last decade, the last time that stat was updated. So yeah, the Fed's probably going to hike interest rates, if anything, to defend the currency. It paused last year. It stopped lowering the rates because it was refueling inflation because of the debt crisis, the debt spiral that the US has. But obviously interest rates rising is going to cause widespread defaults in the domestic economy, because of the debt that businesses hold. They won't be able to repay the extra interest on that debt, so they will go bust. Households will go bankrupt as well. So we'll get a major recession, and massive spending cuts from everyone. The government will want to induce massive spending cuts, even more than we've already had. So we'll get falling stock prices that will probably never recover, rising inflation, which is already going to happen with the tariffs anyway. So this will just compound inflation, rising unemployment, rising debt payments, rising defaults will obviously hit bank balance sheets. Any Fed bailout of the banks, they'll try and bail out the ones that they can, the bigger ones. They're going to have to let some of them fail. Again, that will reduce the number of banks left in the US. But any bank bailout is going to supply liquidity for capital flights out of the US dollar, because other currencies are going to be seen as safer at this point of time. Obviously, the overall impact on other currencies is hard to predict, though, because Europe doesn't have a strong economy. It's in the same, Britain's the same. It's the same situation everywhere. We're seeing deindustrialization, i.e. the fall in manufacturing employment because of automation, because capitalism itself needs to do this. It needs to raise the number of commodities it produces in less time. That causes devaluation. So you have to offset that by producing even more to raise the overall mass of profit, but the innovation required to do so, and we tend to innovate more. As the more we expand production, the higher the proportion of innovation involved in that process tends to get. So yeah, the capital flight from the US dollar will increase or worsen the inflation. And yeah, on the stock market, the retail investors are going to get wiped out, because whenever there's a fall, they're the ones buying up with the expectation that the stock markets, well, they're not the only ones always buying up, but this time, at the moment, they're the ones buying the dip, the fall, the lower prices on the stock market. But the stock market is never going to recover from this, so they're going to get squeezed out, because they're just going to end up with all of this stock that they can't then sell at a higher price. Then they'll end up selling it at an even lower price to the big institutions and money holders who are sitting on much bigger reserves. And that again gives rise to this centralization of capital. So we see centralizing wealth, centralizing ownership of capital. And that's just the way capitalism works, I'm afraid. And it's just the way it was always going to pan out. Yeah, without a central bank bailout of the stock market, household balances are going to be hit very hard, very, very hard. And Trump wants this bailout. He wants lower rates, but the only way he's going to get it is by packing the Fed with his own people. He'll probably do that at some point. Um, but that that would just it looks like it's turning into a panic from his perspective. I can see what he was trying to do with tariffs and why he wants to devalue the US currency to make it more competitive to a certain extent. But China was just probably too strong for the US now. Probably left it too late. In my first book, I mentioned that the Rockefeller Foundation said that, or had sort of calculated that if it was to defeat China in a war, it would need to do so by 2025 because of the advances China was making militarily and economically and all the rest of it. And it's 2025 now, so they've probably left it too late. The military is, as I say, strengthening in China. Their shipbuilding outstrips America's massively now, so it's becoming a naval threat, which is the thing that the US has relied on so strongly to retain control of world trade. China just has too much, probably just has too much control of resources, such as rare earth metals, controls something like 90% of the processing. And while the US is trying to punish China, China is obviously going to massively restrict the US's access to that. So my money's on China, but both China and the US need publicly owned economies. This is how this is the only way in the end this situation will be resolved. The US population needs a publicly owned economy to save its pensions, save people from mass eviction, people who have businesses who are going bankrupt. You need publicly owned economies, starting with energy, because the bills you're having to pay for energy is putting you out of business. Like, the more automated energy production becomes, the more expensive it's going to become. But we can't reverse that. Reverse that because capital needs to accumulate, and when it accumulates, it devalues. It's just inherent. It's a lot to take in if you're hearing this stuff for the first time, or that you've been told that socialism is the road to serfdom. But we're on the road to serfdom, or whatever you want to call it now. We're looking at mass immiseration, and yeah, I don't know how long it's going to take for this to play out exactly. It could take years for hyperinflation to really strike. I don't know. It obviously depends on negotiations, what Trump backs down on. But look at my videos. Before every crisis, you get a build-up of surplus capital that cannot be reinvested profitably, and that is illustrated best by money market funds. If you go on the Federal Reserve website, you can see the build-up of money market funds. It rises before every recession, and at a steeper rate every time. And you can see that in particular with the past three recessions, just absolutely shooting up. It's something like $7 trillion sat in money market funds at the moment that just can't be reinvested. Then there's other passive funds as well, but that's a really good one to illustrate this crisis. So it was coming before Trump. And Trump, I just have to emphasize, Trump is a symptom. Someone like Trump was going to come along with his sort of policies, just as after 1929 Hoover implemented high tariffs as a sort of desperate bid to generate revenue for the collapsing tax base. And this just means that people are going to have to realize that and come to terms with the fact that capitalism has run out of road. It just has. We've got advancing AI, we've got robots becoming cheaper than labor. So there's no labor time to commodify, which is the source of value. Obviously, I'm not going to win that debate in this video, but if you're not commodifying labor time, you're not actually creating new value. You're just producing things without any new value, and that demands a new, higher economic system that can operate without having to depend on profit. It will operate on a break-even basis, and money having become obsolete because it's becoming so abundant, because the more commodities in production, the more money in circulation. We need to replace money with non-transferable vouchers. And like I say, because in a total monopoly, this final merger that we're heading towards, it has to be carried out by a socialist state. So, yeah, band together, pool resources, join a communist party, start convincing people that we really need a socialist economy, a publicly owned economy. It can't be taboo anymore because everyone depends on this happening. Like, no one is going to benefit from collapsing world trade. Even capitalists are going to be going bankrupt and falling into the working class, or worse, full destitution. So there's nothing else that can solve this. Absolutely nothing. So I've been hearing for a long time that people want honesty in politics. This is it.